Hello, I'm Bernard Hickey from interest.co.nz and welcome to Slightly More Than 90 at 9 this morning, because the world has changed. Overnight, Congress voted 228 to 205 against the US $700 billion bailout plan. This was a complete shock to financial markets. Everyone in leadership in America had said everyone should vote for this. We had President Bush, Treasury Secretary Paulson, Federal Reserve Chairman Bernanke all said this needed to happen to stop a financial catastrophe. Instead, congressmen from both sides of the House, Democrat and Republican, voted against the bill because it is so unpopular with Main Street, with real people in America. They just do not want their money to go to bail out bankers on Wall Street. The Dow fell as much as 700 points immediately after the shock decision. Currently, it's down about 6%. You'd have to say it will close lower. The S&P 500, which is a much broader measure of what's happening on the US stock market, that is down 7%. This looks like being the worst day on the Dow in a long, long time. The Nasdaq was down 7.7%. Meanwhile, America's sixth biggest bank, Wachovia, collapsed overnight. Essentially, authorities brokered the sale of its banking and branch network to Citigroup for $2.1 billion. This is a company that just a few months ago was worth tens of billions of dollars. Now, no deposits have been lost, but this is clearly a banking collapse. The government has had to provide loss protection for $312 billion of mortgage debt, just so Citigroup would take this on. Meanwhile, across the Atlantic, Bradford and Bingley was taken over by the UK government overnight. Its deposits in its branches were sold for a pittance to Banco Santander, a Spanish bank. Again, it's essentially collapsed. A Belgian, Dutch and the Luxembourg governments have nationalised the Dutch-Belgian bank Fortis for $16 billion. Essentially, they've taken it over and injected funds into it. Now, what does this all mean for us here in New Zealand? Well, obviously the stock markets will fall. You'd have to think they'd fall 3 to 4% when they open today, but that's not actually so important for New Zealanders. We only have about $20 billion or so in there. We have a lot more of our wealth tied up in the housing market, and obviously we're much more exposed to the real economy. So what's going to happen to our economy? You'd have to think the rest of the world, which is already going into recession, will go into recession. We're already in recession. It means the recession is likely to last for longer. But we are in a much better position than we were, perhaps going into our last significant recession in 1991-92, when unemployment was heading for 10%. Currently it's 3.9%, and this is a common trend around the rest of the world. We're in a much better position to deal with a significant downturn. But we will see interest rates remain higher for longer, particularly for those people with fixed mortgage rates, and that's most people, because most of that debt is funded from international investors. We'll also see the recession last for longer. Currently it's due to finish, according to most economists, in the September quarter. You'd have to say it will go into next year. And it's possible the Reserve Bank will cut the official cash rate by more than the expected 50 basis points when it meets again on October the 23rd. That was well more than 90 at 9, on a day we should all remember as the day Congress voted against the bailout plan. I'm Bernard Hickey for interest.co.nz.